Hello guys, welcome back to my channel. My name is PureHEART. So in this video, I'm going to be analyzing GPB AUD, NZD USD, and AUD USD using Fantastic 5 setup, blind spot, manipulation, entry formula, danger zone, and hybrid in line with market structure to do top-down analysis so that we'll be able to know where to take a trade, the direction we are going to be taking our trade, the direction we are going to be looking for what Fantastic 5. Like I always say, don't be this person, right, that is always busy in 5 minutes time frame, 15 minutes time frame, even 1 minute time frame, looking for Fantastic 5 here and there without understanding the trend or the direction of the market, right? The boss, Nora Karim, the founder of Bastra, said multi-time frame analysis is the key to every setup. So if that is true, means that when you do your top-down analysis, for me, I do my top-down analysis using Fantastic 5 because multi-time frame analysis is key to every setup, right? So by the time you do your top-down analysis from the higher time frame and then you find a setup in a lower time frame, that setup is going to play out 100% for you, right? It's rather than just busy looking for Fantastic 5 in a lower time frame without understanding the higher time frame direction. All right, so let's get started, guys. We are going to start with GPB AUD. Let's start from the monthly time frame. So this is the monthly time frame. What can we see from the monthly time frame without delay, guys? So the market was in a downtrend from this point here. This is a high, this is a lower low, lower high, lower low here. And then the market went back up and breached the Dow theory. The Dow theory was breached here, which means the market take out the previous lower high, which means that the market is in an uptrend in this scenario. The market is in a downtrend. And also this is what the impulsive move, and this is the corrective move, right? And then we are expecting the market to make another impulsive move up. So in this, from the chart, from what we are seeing on the screen, we are in an uptrend. All right. So now let's scale down to the weekly time frame to see things clearly. So this is the weekly time frame. What can we see from the weekly time frame, guys? So based on market structure, we can see the market also is in an uptrend. This is a low, this is a high, higher low, higher high, higher low, higher high, then higher low, right? So we are expecting the market to continue another higher high, to continue going up bullish, right? So in this wise, we are in an uptrend. So now, can we identify a setup here from the weekly time frame? Can we identify the structure from the weekly time frame? What can we see? For me, I am seeing what we call Quasimodo continuation. So let's go to the lower time frame. Let's go to line chart, guys. Sorry about that. So this is a line chart. So let's mark our Quasimodo continuation. So this is a low, high, higher high, lower low, right? So now let's go back to candlestick and let's mark. You see, this is a Quasimodo continuation. Why is it a Quasimodo continuation? Like in my previous video, I said that Quasimodo continuation comes after a trend reversal in the market. So when you look at the weekly time frame, we have a Quasimodo reversal here where the market change structure. We have a Quasimodo reversal here. So this was the high, this was the low, it was the higher high. Then the market came back down to activate the Quasimodo reversal before the market shoot up. So this one is not Quasimodo reversal. This one is what Quasimodo continuation because it's happening after this trend reversal, right? So we are going to connect our line. So this is what you need to know. so that you use this setup to do your top-down analysis, and believe me, you're going to win, right? So we can connect our trend line from here to here. So this is actually Quasimodo continuation. Also, now we have identified our Quasimodo continuation, so we can look for, remember, Nora Karim said, multi-time frame analysis is the key to every setup. So now we found a Quasimodo continuation on the weekly time frame, which means we are going to be looking forward, entering Fantastic Five in a lower time frame. We're going to be looking for another setup in a lower time frame to drive this market bullish. So the moment we see a setup in a lower time frame, is going to be a win for us. But then we also need to look for confirmation of this QMC. So we found this QMC on the weekly time frame. So we have to go to the monthly time frame to look for what our confirmation is going to be, momentum candle or bullish engulfing candle, right? As confirmation. So let's go to the monthly. So guys, if you look at the monthly time frame, we are seeing what? We are seeing a bullish engulfing as confirmation. This is the confirmation of that Quasimodo continuation on the weekly time frame. Guys, this is how to do top-down analysis using Fantastic Five. Now we have to determine our hybrid and our danger zone. So I hope you know what hybrid mean and danger zone. So if you don't know what hybrid mean and danger zone, I'm going to do a special video on hybrid and danger zone and what did they mean. All right. So we are going to connect our trend line here. So connect our trend line here. And then we determine hybrid, detect the direction of the market, right? And the danger zone is what is the danger zone? Danger zone basically means that major supply and demand area on the chart, right? Possible areas, possible supply areas and demand areas or major supply areas and major demand areas on the chart that price can possibly reject from. That is what we regard as what the danger zone. So this is our danger zone from the weekly time frame. So now let's change that color. Let's give it a nice color. Okay. That color. Okay, so this is the danger zone from the weekly time frame, which means that, when the market is coming from the danger zone, and you find a setup, that setup can easily fail because of what? Because you don't notice that the price has already coming from, or price has already touched the danger zone, or price is rejecting from the danger zone. That is why your setup did not hold. That is why it is very important when we are doing our top-down analysis, I will be considering and determining each danger zone on each time frame. Remember, every time frame has its own danger zone, hybrid and danger zone, all right? So in this wise, this is the only point where if the market get to this point, I don't want to be looking for buy from the weekly time frame. So, but this is futuristic, right? So this is how to determine danger zone and hybrid to know the direction of the market. So now let's scale down to the daily time frame. If you are getting value with this analysis, make sure you subscribe and leave a comment in the comment section, all right? And even share this video for people who want to trade Bastra profitably, all right? Shout out to my mentor, Nora Karim, for the knowledge. Thank you, Ma. I really appreciate. So guys, let's continue. So from the daily time frame, what do we see? That is why in everything you need to, from the daily time frame, the market, the price looks so scattered, everything looks so scattered, right? That is why you need to understand. Let me show you something. We need to understand market structure, right? This move here is we are going to be seeing this retracement on the weekly. We are going to be seeing characteristics of a downtrend. I've talked to, in my channel here, I've spoke about multi-time free market structure synchronization, right? You need to understand the relationship of these different time frames, all right? So this retracement here is going to be giving a characteristic of a downtrend on the daily time frame. So now, let's go back to the daily. Let me show you there. So this is the daily time frame. Now, from the daily time frame, we can remove this one. It's just analysis. We can remove this one. From the daily time frame, when the market was making a retracement on the weekly, we have this characteristics of a downtrend. And the market is also moving in respect to Fantastic Five. From this point where the market was retracing, you know, weekly retracement is a lot of opportunity to sell if you know market structure and you relate market structure in line with Fantastic Five, right? So now when the market was dropping, I can clearly see many setup there. We have we have SNRC2, we have QMC there, a lot of setup that you might have take opportunity. But right now the market is where? The market is at the weekly um, Quasimodo continuation. All right. So now the market is coming from the weekly, and we want to look for buy because the market has gotten to the weekly Quasimodo continuation. So if you don't do top-down analysis, how will you know? Maybe you are busy looking for selling opportunity on this particular pair because you saw like some people will chat me up. I saw this setup. Why did this setup fail? Why did this one fail? There are a lot of things, guys, you need to know. You can't learn a strategy in one day. All right. So you have to, whenever you set up fail, ask yourself, why did this setup fail? Go back to the chart and see reason why the setup fail, right? So I was also trading like that, but I have come to realize the power of multi-time frame market structure. I mean, multi-time frame analysis. All right. The power of multi-time frame analysis is key. And also be patient to wait for these things to happen for you to take a trade. So now let's go to, we are looking for buy, and the market is reacting from this uh, uh, Quasimodo continuation from the weekly here. So let's go to the H4. And now, because we are looking for buy, we are going to expect a setup to happen on H4 time frame, because this Quasimodo continuation is coming from the weekly. So if the setup is coming from the weekly, we are going to see entering on the what? Entering on the H4 time frame. I'm going to only see entering from the H4 time frame and maybe H1 time frame as well. So let's go back. Let's go down to H4 time frame, guys. So this is H4 time frame. I'm going to change this setup to, okay, let's go back to daily. Can we change this setup? Okay, let's go back to H4 time frame. Okay, guys, from the H4 time frame, I am looking for what? We are looking for entry. You know, ever since the market got into the QMC weekly, the market was in a consolidation, right? And then the market finally broke out, right? So now what can we see? What entry can we see here? We are seeing a blind spot here. So I can see a blind spot here. Let me mark. I'm going to zoom for you guys to see. So I have a blind spot there. What is the meaning of blind spot? Blind spot fall under the category of reversal. So let's mark that set off first. So this is a blind spot. And what is the meaning of a blind spot? Blind spot means a reversal. Blind spot fall under reversal category. Blind spot is signaling us that there is what? There is a reversal in the market, which means the market is changing from a downtrend to an uptrend. From the higher time frame weekly, we found a Quasimodo continuation. And from the lower time frame, we are seeing a blind spot from the H4 time frame. So this is going to be what? We are expecting the market to drop back down. We're expecting the market. Yes, I'm coming. Hey guys, we're expecting the market to shoot up tomorrow. We are expecting a buy on this particular pair. So we expect the market to, today is Monday, 20th May. Yeah, 20th May 2024, right? So we are expecting the market to drop down here and then we buy. So this is a blind spot. And also we are also going to look for confirmation of this setup. We don't trade. When we find a setup, we look for confirmation. Don't be in a hurry. So we can say we want to buy this pair tomorrow. Yeah, but we find a confirmation. But we are going to look for, we are going to wait for smart entry. When the market come down, we are going to wait for smart entry here. But also, because when you go to the daily time frame, the market structure-wise, the market is still in a downtrend. Is still market structure-wise, the market is still in a downtrend. So in that case, we are going to determine our H4 danger zone. So from the H4, let's determine our danger zone. Like I said, each time frame has its own danger zone, right? So let me zoom. So this is the danger zone from the H4. So which means the moment the market gets into this point, we don't want to be buying until the market break this zone. Then if the market break the zone, which means the Dow theory is going to be breached on the daily. That is when we'll have enough confidence to continue looking for buys, because the market can get to the danger zone and reject back down. So that is why the danger zone is area where we don't want to be participating. All right. So we have determined our danger zone from the H4 time frame. So now let's look for confirmation of this blind spot. So see, we find a confirmation on the H4 time frame. We'll find a setup from the H4 time frame. Our confirmation is going to be daily or above, right? So let's go. So now the daily candle has closed already. So this is a confirmation. Is this a bullish engulfing? No, this one is called a momentum candle, full body candle as confirmation, right? This is a full body candle as confirmation. So this is how we analyze the market using purely Bastra concepts, right? So I hope, guys, you learn from this analysis. So by the time the market comes here, we look for entry confirmation and then we buy. All right. When you start looking at the market, do your top-down analysis, and you will see the power of multi-time frame analysis. And you'll be able to, when you find a setup in a lower time frame, you are going to kill the market. So you deal with patience here. You don't be in a hurry. So let's do one more pair before we can end this video. Let's do one more pair. So let's analyze NZD USD. So I'm going to analyze NZD USD. Okay. So I'm going to remove everything here. So let's quickly start analysis on NZD USD. So we can start from the weekly time frame. So if you look at the weekly time frame, guys, the market was in a downtrend. The market has been trending down, impulse, correction. That is why you also need to understand market structure. We combine market structure with Fantastic 5 to, do analysis and also to look for entry in a lower time frame. All right. So from what we see on the weekly time frame on NZD USD, this is impulse, this is correction, impulse, correction, then impulse, right? So for the past how many months this market has been selling. This particular pair has been selling. And now all of a sudden the market reject up. So why did the market reject up, right? Look at this area here. The market failed to break down to continue going down, got to this point, and then the market started shooting up, which means that we are what? We are in an uptrend because this is the weekly time frame. For the past 1, 2, 3, 4 weeks, we have been, the market has been bullish. Bias has been in the market, right? So this market rejected from this setup. So when you started consulting higher time frame, you will see difference in your analysis, right? So let's change that to, yeah. Okay. So the market got to this manipulation entry formula. Why is it a manipulation entry formula? This is what this is rally-based rally. So manipulation entry formula is a situation where we found, there is a bullish engulfing or a bearish engulfing is formed on a higher time frame. And the lower time frame, we found a rally-based rally or a drop-based drop inside that bullish or bearish engulfing. So in this wise, we found a bearish engulfing. Market rejected from this point here, from this rally-based rally. So it is called manipulation entry formula. At this point, when we go to the monthly time frame, you see that on the monthly, let's go to the monthly. On the monthly, we found a bullish engulfing here. We found a bullish engulfing here. So, and that rally-based rally on the weekly time frame is formed inside this bullish engulfing. And that is why the market got to that point, because that is a major demand area that is pushing this market up. All right. So the market moved in respect to Fantastic 5. I don't know what is so special about Fantastic 5, but market respect Fantastic 5 in all time frames, right? So down, we have a direction. Market is coming from the manipulation entry formula on weekly, and the market is pushing up. So in this wise, we are going to be looking for what? Buying opportunity, right? So now let's go to the daily time frame. So when we get, this is the daily time frame. Now that we said we want to be buying, we want to be buying this pair. You know, when the market got to manipulation entry formula on weekly, the market provide a setup here, which is reversal setup. Blind spot is a reversal. The moment this happened, you know that, okay, the market is rejecting from the higher time frame manipulation entry formula. And on the daily time frame, we found a blind spot there. You go to the lower time frame and look for entry, and you even swing, because when you find a setup on a higher time frame, it's going to play out in days. So you can swing, right? So now that we want to be buying, and when you look at the market structure as well, you see that the Dow theory has been breached from the daily time frame. This is the last lower high, and then the market breach, right? But if you know Fantastic 5, if you are familiar with Fantastic 5, from this sign here, market rejecting from the manipulation entry formula weekly and this blind spot, from this sign here, you should know that this market is going to change direction without this even previous high being breached. Because what? Because Fantastic 5 is the language of the market. It's the price action language. It signifies a change or a reversal in the market. Blind spot that's why we call it a reversal. Quasimodo reversal and manipulation entry formula, they are what? Reversal category. Whenever they happen in a significant area, you should know that something is about to happen. The market is about to change direction. All right. So, but from what we can see here from the H4 daily time frame, the Dow theory has been breached, and then we are going to what? We are going to be looking for what? We are going to continue to look for buying opportunity on NZD USD. So we want to determine our danger zone, our hybrid and our danger zone. So from the daily time frame, this is where we have to connect our line, and then we determine our danger zone here in such a way that when price break this danger zone, then we'll be free to continue to look for more buys, because danger zone is the major supply area on this particular time frame that can push the market back down bearish. So that is the point that we don't want to what? We don't want to be buying. And also, whenever we are looking for confirmation, we make sure that none of our confirmation has touched the danger zone. Because when the market is rejected for the danger zone, it may have enough power to de-respect your setup. You might have the market might be coming down with a lot of pressure. That is why it is very important to identify your hybrid and your danger zone and know that, okay, at this area you are buying, you are actually free. So now let's give a color to no, this one. Yeah, so we have identified our danger zone here. So, and here we have a setup here. We have a setup here, guys. So what setup is this? This is blind spot. This is blind spot. This is blind spot. So on the daily time frame. So what are we expecting? We're expecting market to come down to this point and then we buy. We're expecting the market to come here, then we buy. But what is going to give us confidence to buy this setup, to buy NZD USD is the same reason we look for confirmation. This is a blind spot, so we'll go to the weekly and look for confirmation. So we'll go to weekly. What is our confirmation on the weekly time frame? Our confirmation is what? This full body candle on weekly. This is the confirmation, right? And look at where we put our danger zone. This is a major supply area that price may receive pressure here. But if price break this zone, this danger zone, then we'll continue to look for more buying opportunity. So danger zone is actually guiding us to know where price is coming from and to know when we should be taking our final profit, right? So this is analysis on the NZD USD. So on H4 time frame, you know, when the market get to this zone, we'll start looking for what? Since this setup is coming from the daily, we are going to be expecting our entry setup on the H1 time frame and M30 time frame. The moment the market enter here, we start looking for setup. In fact, if the market make mistakes to enter this zone, it's going to be free money. We're going to be buying without fear of favor, right? So we're going to be looking for entry setup on the H1 M30. We buy this particular pair. So if you look at AUD USD, it's almost the same thing. Let me quickly show you AUD USD. AUD USD, NZD USD is almost the same thing, right? So AUD USD. Yeah, so when you go to AUD USD, you see we found also the same analysis with NZD USD, right? So this is a blind spot here. You know, when the market, also this market is rejecting from the manipulation entry formula weekly, the same analysis with NZD USD, and this is the danger zone from AUD USD. So when the market made mistake to come back to this zone, we are going to be looking for what? Entry formula, entry signals on H1 time frame and M30 time frame for us to buy, right? So guys, this is how to do top-down analysis using Fantastic 5 manipulation entry formula, blind spot, and also danger zone hybrid in line with market structure in order to know when to take a trade, the direction to take a trade. So the moment we go to the lower time frame, we are going to be expecting to see only Fantastic 5 in line with the bullish direction. That is why Nora Karim said multi-time frame analysis is key to every setup. So for me, I have been trading this strategy for a very long time. So I normally start looking for Fantastic 5 in a lower time frame. Oh, this is this. I entered. So most time market kick me out. So and then I change from why not I start analyzing the market from the higher time frame before knowing when to look for this Fantastic 5. All right. And in this channel again, I've been showing you different ways and different confluences I use. Most and some other time I use a zone of sensitivity to analyze the market in combination with Fantastic 5. But purely I'm giving you the NORA concept and giving you how to analyze the market using purely Bastra concept to do your top-down analysis, go down to the lower time frame, expect what any entry setup, then you react. All right. So I believe you learned from this video. If you get value in this video, make sure you subscribe, make sure you share my video, make sure you leave a comment in the comment section. All right. Like I always said, this thing is not like a movie. It is a game of practice. It is a game of chart time. You really need to spend time on the chart. They say a trend is your friend. I say the chart is your friend. Spend a lot of time on the chart. You spend a lot of time looking at this setup, looking at this thing, looking at how market is moving in respect to whatever strategy you are using, how market is moving in respect to the strategy you are using, how market is moving in respect to Fantastic Five. So that by the time you start paying attention to the chart, it is called the chart time, right? Start paying a lot of attention to the chart. You'll see this game will be changing bit by bit for you, all right? And also, you need to take this game like, take it personal, okay? Like I always say, without devotion, there is no transformation, right? Without devotion, guys, there is no transformation. No matter what you are devoted to, it is the quality of your devotion which will transform you. Thank you for watching. Catch you in the next one. Peace.